Is this tax stalling the UK economy? Stamp duty is now becoming a barrier to people moving. It started off as a minor structural fee. Now it's making it harder for people to move up and down the property ladder. In 2023, 1 million sales occurred, the lowest since 2012, due in part to stamp duty's impact. Average SDLT on a London home, 1.2 million, 63,000 quid. Makes you wonder if it's worthwhile moving. A 1% rise in SDLT leads to a 1.7 drop in the chance a household will move, according to London School of Economics research. Young families and first-time buyers are trapped, even with Help to Buy as it was. The tax makes it now unaffordable to move for many people. They haven't got the cash. Downsizers are also hit. Moving from a 2.5 million property to 1.5 million could cost 90,000 quid in tax. I mean, it's the truth. It's a useless tax. Families are stuck in homes that are too small. Retirees are left in homes that are too big. Inefficiency worsens the UK's housing shortage. The recent stamp duty changes that we had that came in April have already triggered a market slowdown. House prices were flat in June, as per Halifax data. Average UK house is now £296,000, and house price growth is at 2.5%. So that's weak. Market recovery is now under threat. Economists are now downgraded 2025 house price forecast due to tax changes and economic uncertainty. The Bank of England rate cuts are still expected this year, which could ease mortgage problems, but stamp duty remains a major drag. First-time buyer activity briefly surged before the April 1st deadline to try and beat it, but it's just a short-term thing. What is stamp duty? 2% surcharge still applies for all non-UK resident buyers, meaning those with fewer than 183 days living in the UK in the preceding 12 months. It's an addition to all SDLT. Thresholds are reset in April 1st, 2025. Nil rate bands return to the pre-pandemic levels, 125,000 quid. First-time buyer relief up to 300,000. So it's just not an efficient thing. So let's look around the world and see what other people are doing. That's always a good idea. The suggestions are that experts are saying that reform council tax instead, based it on property values, so it's an ongoing thing, so it's an ongoing tax, not an upfront tax. Reduce or replace SDLT, it could easily unlock mobility, increase sales and boost economic growth. I.e., if you're living in London and you get a job in Manchester, are you going to move your whole family up there and pay all this whacking stamp duty to do that? No, you're probably going to commute, which is not going to make it a long-term move. A well-functioning housing market is more about transactions. It supports jobs, consumption and family life. Stamp duty isn't doing that. It's making it more difficult to live. Other countries then, onto that, look at the US and Canada. It's very similar. Property taxes are imposed at a local level, so it's not like an overall general tax from the government. It's by the local municipal locations, and they're assessed on the value of the property, and they help fund local services such as schools, roads and public infrastructure. Recurring and paid annually. So you pay them either 6 monthly or yearly. So it's more like a council tax, which is excellent because it means that you're not going to have to pay this big lump when you move. Rates can vary a lot based on age, income level, state and so on, but you have to be aware of that when you're moving house in the US and in Canada. In Australia, they have land tax that applies to the improved value of the land. Tax is imposed at a state or territory level again, and rates vary. Again, it's charged 6 monthly or annually. It's not a big lump sum up front. Okay, so you've got two different things. You've got recurring versus transactional. The UK is transactional. The rest of the world is looking at recurring, which is an important thing. And where does stamp duty go is the thing. SDLT raised 11.6 billion 2023-2024, which was down from the previous year, which is 15.4 billion. What does the government spend its tax money on? I mean, this is where the money goes. Social protection as a quarter of all the 1 trillion a year the government spends. Its benefits paid to pensioners as well as those who are working age people. Before the general election was announced, OBR predicted spending on social protection would rise to 371 billion in the next year. A fifth of all government spending goes on health. Health spending has been rising for decades and so on and so forth. And OBR expects health spending to be 251 billion in 24-25. So the money raised for stamp duty, it's 11% of all the money it's spent, 11.5 billion. So it's a big contributor to it, hence why the government doesn't want to give it up. But that's pretty grim, really. So stamp duty, is it killing the UK property market? I'd say to a certain extent, it is. And stamp duty needs to be reformed and reviewed and removed. It isn't just a tax, it's a trap. It's locking people from moving homes, slowing down the market and putting real lives on hold. Changing it to the US, Canada, Australia approach on an annual basis would remove the lock, and it would. Reform is the key to unlocking growth in the housing sector that we're seeing as far as SDLT is concerned. So it's a bad tax. Interest rates, okay, some questions from this last month. Interest rates should be around 6% and should be kept there for at least 5 years. Dropping these rates is not going to stimulate any effed up economy. That's from Indus Vision 2560. I don't know, if you've got a choice of putting your money in the bank and getting 6% if you're a company, or putting the money into your business, if you're only getting 3% in the bank, perhaps you'll put it into your business. Perhaps you'll invest it. I think having lower interest rates is a better idea than keeping them high. Steph Foxwell, 4620, says, UK house prices have doubled in 21 years. Yeah, they have. It won't happen again. Having said that, we didn't expect COVID. We didn't expect all the myriad of different things to occur. So things can change. Things can continue to go upwards. And the problem is, in the UK, is that we've got such a housing shortage. And because we're at the beginning of the Industrial Revolution, because of that, all our infrastructure is so old. Hence HS2 is such a hard thing to get going. Because of that in the UK, we're struggling to get ourselves ahead of the game. So things can change, who knows? But I doubt it. If the government can't even get its basic promise of building a number of houses over the next 5 years right, because it hasn't got the manpower and it didn't plan for it. Finally, Sheena Maddock, 4534, buy-to-let is no longer a good investment, so many lands are selling up, and who can blame them? Capital gains tax, Section 24, EPCs, etc. I'm leaving the market. It all depends on how you own the property and what you set out to do in the first place. So Sheena, don't give up, put a bit more effort into it, and perhaps it'll turn out okay. That's it for this week. Thanks very much. Stuart Williamson, Market Wrap.